Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for December 4th, 2007. Well, here we are, folks, and it is Tuesday. Markets have closed about 4:30 in the afternoon on the East Coast in New York. And what can you say but again, a light volume trading ruled today. 1.38 million contracts traded. That's even lighter than yesterday by about 100,000, which is in tune about a million lighter than last week on average. Now, what's interesting about today is, again, we saw attempts at a small rally early afternoon, but it all gave way to us selling off in the last half an hour again to close near the lows. Now, I'm not talking about big sell-offs by any stretch, but the Nasdaq did close near the lows today, down about 17 points. And what's interesting about this, folks, is that while the S&P closed down 9.6 and the Dow closed down 65.84, the light volume, as opposed to when we were in a bull market, whenever we had light volume in the market, that favored the upside. Now we're seeing light volume favoring the downside. And again, it's showing lack of patience in dealing with this market. No one wants to step up, lack of conviction. No one wants to take the risk and buy here. And I think that's a valid point. And I think it's very interesting to understand what's going on here with light volume trade, how we are going down. Now, light volume, when you sell off on light volume, what that's telling us is that there's not a lot of institutions behind it. So you're not seeing a lot of institutional selling, which doesn't mean it's not to come, of course. But what it means is we might be due for a small bounce in the coming days. It would not surprise me to see a bounce, to put it to you this way. Now, that doesn't mean we are going to bounce, but we should be aware that light volume sell-offs can mean a possible reversal in trend on any volume if it comes in. And that's the same with as in when we were going up. Right before we fell, we noticed there was very light volume in the markets as well, and that indicated to us that the moves up on light volume were not very substantial. Not a lot of funds or large money was involved. And again, that said, all right, be careful here, we might fall, and we did actually fall very hard, obviously, as we've all noticed. Now, just looking across here, what we can see here, and I'm going to show you the SPYs, we're just going to get right into it here with the SPYs, is that we've had three successful red candles here, successive red candles on the SPY, and this basically mirrors the S&P. One thing of note here is that we are coming down to the 50 moving average, and this could be some support. So when I talk about a possible bounce because of light volume sell-offs, it could have something to do with the 20 moving average being right here. Maybe we move down tomorrow and then bounce the following day. In addition, you also have the Fed. The Fed is on December 11th. We should all be aware, and we should all be fully aware that in many situations the market might move up into it, or if it doesn't move up into it, we might see a move up on the Fed statement. Okay, the Fed is not stupid here. They understand what's going on in the markets. They understand the issues in the markets. They also understand that the market's expecting a 50 basis point rate cut. All right, now if they don't do something to at least match expectations, I think if they match expectations, we rally. If they beat expectations and do bigger, meaning 50 basis point cut in the Fed funds and maybe a 50 basis point cut in the discount rate or something along those lines, the markets will rally as well. Anything less than that, anything less than expectations, and the markets could get very scared here that the Fed's not doing enough. Unless a certain statement is made by the Fed, basically reassuring the market that everything will be fine or everything's looking better or something along those lines. So it's very important to realize that. Now, again, let's look at the intraday on the ES. And I love the intraday ES chart. And here, let's flip over to the ES. You can basically see, and let me get my trend tool out here, that we basically had a sideways day. I mean, there's not a lot for me to talk about today aside from a few key stocks that I'm going to mention in a couple minutes here. And you can even move that line up a little here and draw this in here. You're basically in this channel all day. And for those of us as day traders, we actually had a decent morning. There were some nice moves, especially on solar stocks. Certainly the solar Chinese stocks, which I'm going to show you, were just monsters. And these stocks have been such monsters lately that I'll really get into that in a minute here. But for now, I just want to show you the channel. This is a channel. No doubt about it, guys. We closed below the channel here towards the end of the day. But really, if you want to look at this, you really see that we just had a double bottom. We basically closed at the low of the day on the ES at a double bottom, which again can be looked at as possible support. We'll see where things go, but for the most part all day we were in the channel. We did dip here, which was where we ended the day here on the double bottom on many candles here. All right. But overall, that's exactly what happened. So again, just to summarize here exactly what happened, we saw the channel here. We had the dip outside the channel, but we basically closed back into that channel and that's where we ended the day, which is interesting symmetry. Everything in the market's always symmetry. All right, and you'll notice that on charts, and that's why technical analysis is so key. Understanding all the technicals, especially reading charts and candlesticks, is because you always have symmetry. And just to kind of show you here, let me erase these lines, a little more symmetry. Not only did you have the double bottom here in the chart at the end of the day, but you also had a top here, a little bit of a shoulder here, shoulder here. All right, so you had a little head and shoulder pattern formation there, and you can see these patterns here. All right, you can see what we're talking about here when we're talking about symmetry. Everything's a W, an M pattern, a head and shoulders. There's always ways to look at the market, and if you're good enough at technical analysis, you can see exactly what we're talking about and analyze and understand where this market is most likely headed. Now, there was an attempt at a breakout here on the ES chart, and I'm going to show you that. Right up here, we basically moved up, all right, and we closed above the 20 moving average. Well, now the question for the next time is, you really want to take out the high of this candle for a solid breakout. And we went up here in this, well, the next candle we actually sold off. And then the next candle came up, touched that high again, and again we sold off here on this next candle, but then we did bounce up at some point in the candle and took out that high. But the key here is on light volume, if you don't get a close above that candle, it can reverse. So when you're dealing with light volume, what it's best to do, you better wait for confirmation by a close of a candle on a 10-minute. Just like on the daily, you wait for a close on a daily chart of a day above the prior high or below the prior high. A dip above or below can be very sporadic in dealing with confirmation. And when you're dealing with light volume, normally if you're looking for a scalp trade and you're having good volume in a day, just a push above shouldn't be enough to send it up here, or maybe, right to this 200 moving average. But when you're dealing with such light volume like we saw today in the markets, you really want to see a close for that consecutive move. So we did wait on the sidelines there, and just to be safe. All right. In any case, let's look at some of these Chinese solar stocks after we look at the Nasdaq here quickly, and a couple of the other trades that were out there today. All right. All in all, what we're seeing here is some interesting footage here on the Nasdaq, and I'll show the Nasdaq chart here in a sec. And there's the chart of the Nasdaq. All right, and again, you saw the choppy trading here for the most part, ending near the lows again, and we saw a range-bound market here. Now, what's interesting here about this is that the Nasdaq last week, we had a nice bounce in the markets, but slowly on these little drops on the Nasdaqs, we're giving back a large percentage of this. All right, yesterday we were down 20 plus points. Today we were down 17 points on the Nasdaq. You add in a couple more of these days, it's going to accumulate to be close to 80 to 100 points on the Nasdaq. So again, we should be very watchful of that. Let's look at the daily chart here again on the Nasdaq. And what you're seeing here in this chart is that we are below the 20 moving average again. Here's the 20 moving average. And yesterday we closed below it. We wanted to see, did we get another close below? And the answer to that question is yes. That's where we closed. Now what you're going to have here is a gap window. The gap window becomes in play. And until the gap window is punctured, meaning until you close, you get inside of this line from the very bottom of this, it usually is support. All right, so that's very key to note, is that down to this line will be support. Once you get a close in this area, you usually will go to the bottom of the gap and fill the gap, excuse me. All right, so again, once this pink line is punctured, especially you want to see a little close on a daily below there, in general you will see a sell-off to this point to fill the gap, and at that point you have a completed gap fill there, and there'll be more support at this line. And notice how the line basically is coinciding with the 200 moving average as well. So keep that in mind, is that there's a lot of technical levels here right underneath the chart that are telling us that yes, it looks like we are going to head down at some point, possibly break these lows. And again, when I talk about breaking lows, I'm talking about even down here. But in the near term, we are going to have some different support levels that the market's going to have to fight down. And it's in my personal belief, and again, it's just my opinion, so don't take it as anything more, but at some point here, you're going to have a bounce because there are so many support levels. At one point, the support is going to hold here, whether it's at the gap window or the filling of the gap here, and we will see a bounce back up. All right. Now, let's just talk about some of these Chinese solar stocks. One of them was CSUN, China Sunergy. Just a tremendous mover today. If you can see on the daily, look at this stock, Chinese stock. It was trading up here, came all the way down. Once it makes this nice little bottom here after a sell-off like this, I love that chart. And look at the move it had yesterday, then again today. SOLF came out with great earnings a couple days ago when it was trading right here. Look at this stock. It went from basically $11 here to upwards of $29 today at the top here. This is at $29 up there. So you're talking about almost a 200% gainer in the realm of this stock in the last 4 days. Just tremendous. some other Chinese stocks. And again, we keep on bringing up Chinese stocks because it's whatever's in play. Whatever's in play is what we're going to look for in the chat room, and that's the key here, folks. To day trade, to swing trade, I don't care what it is, but if it's in play, we make money off of it. RCH, another great chart here. Nice little move in the last couple days, and that's about basically from $6.50 now closing at $9. So that's a great move. There's no doubt about that. That's a phenomenal move. And again, notice the chart pattern here. All right, this is a chart that I love. I always look for these type of charts. And again, you have to understand, you have to look in, and was there bad news that was the result of this move? If there wasn't, then in general, it's a good play. If there is, then it gets a little fishier, and you got to do some more technical analysis to look for divergences and so forth on charts. All right, folks, a couple others, KUN, same type of chart, and there's the chart on that one. You can see that drop here, and now the move up here is starting. Have a wonderful day, guys. We'll be back tomorrow with some more plays that are going to go tomorrow. Join the chat room. Come find out which plays next, and join the Swing Trade Alerts. Take care.